What's up, everybody? Welcome to the Stocks channel. My name is Cory, and in tonight's episode, we're going to be bringing you another stock market technical analysis update, and we're going to start out by looking at the ticker symbol SPY, the SP500 ETF. But before we get into it, you know what you got to do. Go ahead and smash that like button and subscribe to the channel to follow along on all of my updates. Now let's go ahead and crack open these charts and see what's going on in the stock market today. All right, so if we zoom in on the price action here, we see that the S&P 500 closed up higher yet again, bringing us above our previous all-time high. So if we switch to a 1 hour chart here, we see that the price action broke above our $338 price target and came back down and tested it and ultimately bounced up and closed above the 5 EMA on the 1 hour chart. Now this is no surprise if you've been following along, because we've been calling for a price of about 341 for a couple of weeks now, and we see that we're almost there, about 1 day away, or striking distance at least, from getting up from this $338.60 close up to our $341 price target, which is only about a 0.86% increase from here. So once we get up to our price target, there is some more downside risk that we need to start talking about, because it's not going to be the same downside risk that we were used to on the run up. Because if we look at Elliott wave analysis, markets typically go up in 5 waves and then correct in 3. And we see here that we have our 5 waves coming to an end. And after a 5-wave structure, we expect to see this sort of ABC correction pattern. And we're going to expect to see that coming once we get to our price targets, which we're just a couple of days away, if not only 1 day away from seeing our price target hit. So typically an ABC pattern would look exactly like what you see here, where you have a pullback, a bounce, and then a further pullback before ultimately resuming up to the upside. So there's no guarantee exactly how much we'll pull back, and we will get into the pullback areas once we start looking at the possibility of a correction. But right now, the number one areas to look at for possibilities of a pullback are these gaps below us, and you really want to watch support at this $330 and $327 level. Now, I can tell you with a high degree of confidence, when we do start pulling back, we should close these gaps absolutely no problem at all. So the question is, are we going to see a pullback into the first gap, a bounce, and then a close of the final gap before heading higher? Or will we see something more extreme? We are not going to speculate. We do know to expect a correction, and we will follow the price action, and we will determine how much of a pullback to expect when the time comes. But right now, expect further move up in the stock market. We still have extremely bullish price action with another solid close above the 5 EMA. So if you look at this run up, it's been absolutely bullish as can be, and the momentum is still very strong in the bulls camp. There's no reason to expect this correction to happen until we see a reversal and a rollover of this trend. So right now we still have the 5 EMA well above the 13 EMA, and we're still trending upward, and we still see the price action continue to grind higher day after day. So at this point, we're definitely going to see this 340s on the S&P 500. The question is, once we get there, are we going to get into our correction, or are we going to get that melt up? That's still a possibility, where we see prices continue to squeeze higher and higher and higher and possibly send us into the 350s. So right now, look for the 340s and follow along on the price action if you're interested to see where this market's going. So jumping over to the Nasdaq 100, our price target has been 280, and we still stand by the price target of 280. And we see today we closed right around 289, so only about $2 away from hitting our target. Now, if we look at the upside potential to our price target, we have about 1% of upside until our price target is hit. Now, we went up about 1% today, so if we go up another 1% tomorrow, we will have hit our price target on the Nasdaq 100. So it looks like we're getting to our price targets on the S&P 500 and the Nasdaq 100 about the same exact time with this current trend that we're seeing. Now, we still see the Nasdaq 100 closing at new all-time highs, and we still see the 5 EMA well above the 13 EMA, and the price action still very bullish with the 5 EMA above the 13. So again, we're still very bullish as long as the price action and the trends are going in this direction. There's no reason for us to panic. We know our risk, we know our downside, and we know our support levels. And right now, you should not be buying at the highs, but you should be getting ready for that correction and that pullback to buy the dip. In this market with this much momentum and this much bullish price action, the dip is always going to be a great opportunity. As you can see here, we had a 3-day pullback, and the dip continued to turn into a rip, and the price action reverses and heads higher. Now keep in mind, we are ending a 5-wave Elliott wave analysis trend, and that will lead to a 3-wave down. So it's not going to be the exact same as what we've seen on the Nasdaq 100 before. We're going to expect to see sort of a corrective wave pullback, which is completely healthy, and the uptrend can continue after that. So right now we still have a price target of 280, and it looks like we're going to have no problem getting there very soon. If we jump over to the Dow Jones Industrial, this is the DIA ETF. We see exactly what I expected after this giant bull run, is to see some time to cool off and the price action to consolidate its gains before heading higher. So I'm still saying look for the Dow to come back and test this breakout before ultimately seeing if it'll bounce to head higher. Buying on support in a bull market is the best way to make money, because the bull market is telling you the trend is up and you want to buy on the support levels, which are going to give you the best entry and give you the most possible gains for the least amount of risk. So right now the industrials in the Dow Jones is looking very strong, and it has more upside potential than the Nasdaq and the SP 500, because as we see here, the Dow Jones has not yet closed its gap from the March crash. So that means there's more upside potential on this market, because we have yet to test all-time highs, which is about 6 to 7% higher from today's close. So it wouldn't be surprising to see a lot of money start rotating into industrials, and I'm expecting this support level, which is this previous all-time high breakout, to hold up as support and continue to see a bounce off of this level before we ultimately head higher. Now the Dow Jones does have gaps below it, and we can't ignore that, and that will have some more downside risk during any event of a correction. So of course, when you're looking at support, you're looking for a bounce. You don't want to just buy on this level. You want to see the confirmed bounce before entering, and then you enter your position with a risk associated below that support to let you know when to exit your position. So the Dow is looking very good, and it's no surprise to see it consolidating. I expect to see it continue to consolidate after this monster of a move, and then ultimately continue to head higher. Now going over to the VIX, we see something which is a little bit of a divergence. We actually saw the VIX close higher today, while the SP 500 also closed higher. And if you remember me saying, we want to see the VIX go lower as the S&P 500 goes higher. So this is showing a little bit of a shift in fear, and we see just a little bit of fear entering the market today, which again is no surprise, because we are breaking the new all-time highs, and people will become more defensive as the S&P 500 breaks to new highs, because they're going to expect that ultimate correction cool down. Now we're not calling a top, and we're not saying exactly when that correction is going to come. So we'll continue to watch the price action, and we'll continue to watch the VIX for any indications that we may have hit a temporary high, and we need to see that corrective pullback before heading higher. So not exactly what we wanted to see on the VIX today, with the VIX closing higher. However, we still do see this nice downward trend on the VIX, and we'll continue to watch it for a bounce into this 23.5 level, which is ultimately going to tell us if fear is going to come back to this market or not. So jumping over to the financials, we see almost exactly what I expected, which is after a breakout, we want to see a pullback into the breakout and see the breakout resistance level act as support before heading higher. And we still see the financials coming down, testing this support level, and then ultimately see if it'll hold up as support and then bounce higher. Now this is an absolute perfect entry for financials, bouncing off of this level and heading higher into this 200 simple moving average. There's a lot of gain to be had from buying off support and selling at resistance levels. So watch for a bounce off of this support level and trade it into the 200 simple moving average. Ultimately, a break higher of the 200 simple moving average would bring us to test the previous highs, and a break of that would tell us that this bull market's going to continue running. So as far as trading goes, the financials look very juicy right now, and it looks like it's very well set up to bounce off support and head up higher for a nice trade. Industrials, we see the same thing. After breaking to a new high, we see it taking time to cool off the clock and really trying to find if this is going to bounce as support or not. So industrials look to see if this previous high is going to act as support, and we see the support was tested a little bit today with a minor close below. So ultimately, that's a warning sign for me. If we go in on a 1 hour chart, you could see this a little better. We closed just below the line here. Now it's a little too close to call, but it is a warning sign that the industrials may continue to come down lower and maybe even bounce off of its 20 simple or 13 EMA before heading higher. So we could see something like this, which is still extremely bullish, because if we zoom out, we see this green trend line is still a support level of higher lows. And higher lows with now a higher high is still a bullish trend. So this support level doesn't have to hold up. We could still come down and bounce off of our trend line and still hold that bullish trend, which is ultimately going to send us higher and higher on the industrials. Now, if we jump over to healthcare, we see that healthcare did break to a new all-time high yesterday, and today really just took some time to cool off a little bit. Still closed above the 5 EMA, and the 5 EMA is still well above the 13 EMA. So the healthcare sector is still looking very bullish, and still showing us that the S&P 500 will continue to grind higher as long as we see all of these sectors showing strength. So with the financials and the industrials ready to bounce and technology and healthcare already heading higher, we could still see the S&P 500 head higher if financials and industrials start to bounce, even if technology and healthcare start to cool off. So the S&P 500 could continue to go higher as the sectors rotate around, and that's exactly what we've been seeing happen. Jumping over the US dollar, we also see no surprise here with the US dollar breaking below our support level. Now this doesn't seem very surprising because we did see this downward trend, and we really just saw a consolidation of the downward trend and resuming the downward trend. So right now with the Fed fiscal policy going on, nobody should be surprised to see the dollar continue to weaken because we know the dollar supply is increasing. So we expect to see the dollar continue to weaken. And as we've been saying, if the dollar is getting weaker, we expect to see asset prices continue to inflate. So this is only backing the case that we should continue to see these new all-time highs because we see the dollar continue to weaken. So right now we're going to continue watching the dollar. It's confirmed our theory that the dollar will continue to weaken, and ultimately we expect to see the dollar continue to show signs of weakness, but we'll continue to watch it for any signs of bounce and strength returning. So let's take a quick look at Apple because we say Apple is a market mover, and we do still have these gaps below on Apple where we expect to see this price action ultimately come down here and close before heading higher. Now, since Apple is a market mover, I think any sign of Apple coming down and closing below its 5 moving average and starting to see a top form will be a sign that this market rally is going to start coming to a halt, and we need to see that correction. So right now we still see Apple showing strength, closing up about 0.8% today, and it tells us we should not expect to see the market roll over just yet because we continue to see all signs pointing to bullish and all signs pointing to the market going higher right now. So let's go back to the S&P 500 and make this very clear. So right now we have a price target to the upside of 341, and where we currently close, that's about 1% higher. However, the downside risk is about 3.5% lower. So there is more downside risk than there is upward reward right now. And that's why you really don't want to be a buyer in this market right now. And that might sound contradictory that we're saying the market's going to go higher, but you shouldn't buy right now. And that's because we don't have a crystal ball. Just because we see the market and the price action telling us it wants to go higher, there's no 100% guarantees in the stock market. So if you're on the sidelines, I do think there's a better buying opportunity coming just around the corner as we expect to see this pullback into an ABC correction. And then ultimately these would be great buying levels to go long and gain on the next bull trend up. But right now, this is a bull trend that should be coming to an end very soon. However, we're not calling the top, and we're not saying exactly when this trend's going to end. We're going to continue to follow the price action and the technicals. And if you look at the price action and the technicals right now, they are still extremely bullish. So continue to watch the indices and continue to watch the price action. And right now, we expect them to continue to head higher until we see some sign that there's going to be a reversal, which we have yet to see. So please remember to smash the like button if these videos help you out, and subscribe to the channel to follow along on all of my analysis. Thanks for watching, and as always, I will see you in the next episode.